Here's something that should not make sense. 3 of the hottest AI stocks of the last 18 months. Companies that have literally printed money for investors. And the people who know them best, the executives, the board members, the insiders who built these companies from the ground up, they're selling aggressively. And yet, every analyst on Wall Street is still screaming buy. So either the insiders are wrong, or everyone else is. Today, we're diving into 3 AI stocks seeing major insider selling. But before we get into the names, we need to talk about what insider selling actually is. Because I think most people are watching this with a completely wrong mental model. The phrase insider selling sounds like a 5-alarm fire. And I get it. My first instinct when I see an executive dumping shares is, okay, they know something I don't, time to panic. But that instinct is almost always the wrong read. Here's why. By law, SEC regulation. Corporate insiders, so executives, directors, anyone who owns more than 10% of a company, they cannot just wake up one morning and decide to sell. They have to file what's called a 10b5-1 plan. They pre-schedule their sales, sometimes months in advance, and those plans are publicly disclosed. So when you see insider selling, you are almost certainly looking at a decision that was made when the stock was at a completely different price in a completely different environment. It's not like the CEO is sitting there watching the earnings report come in and going, yeah, it's time to bail. In many cases, they filed that plan when the stock was trading at 60% of where it is today. They're selling because the plan said sell, not because they got a bad feeling at breakfast. Now, and this is important, that doesn't mean insider selling is meaningless. It can still be a signal, but the signal is almost never, this company is about to collapse. It's usually something more nuanced. And in the context of AI right now, it becomes a genuinely fascinating data point rather than a scary one. So let's set the stage. The AI trade. Broadly, the market's infatuation with anything touching artificial intelligence has been one of the most violent bull runs in recent memory. Companies up 60, 80, in some cases over 100% in a single calendar year. And when that happens, insiders sitting on equity compensation have enormous incentive to take some off the table. Not because they're bearish, but because they're human beings who don't want to see a $5 million paper gain evaporate if the market gets spooked. The AI boom itself is creating the conditions for insider selling. So the right question isn't why are they selling? The right question is, what does the pattern tell us about where these stocks are headed? And what should you actually do with that information? All right, let's get into it. Before the names, quick word from today's sponsor. We talk a lot on this channel about knowing what stocks to watch, but half the game is knowing where your overall financial picture actually stands, especially if you're building a portfolio in a market this volatile. That's why I've been using it. It connects all your accounts in one place, shows your net worth in real time, tracks your spending automatically, and it's helped me get a lot clearer on how much I actually have available to invest versus how much I just think I have available. Try it free for 30 days. Let's talk Seagate. S2UN. S-E-A-G-A-T-E Technology. Seagate is one of those companies a lot of people know but haven't thought about in a few years. They make hard disk drives, the big spinning storage units that have been around since the dawn of the personal computer. For a long time, conventional wisdom was that HDDs were a dying category. Solid-state drives were taking over. Faster, smaller, more reliable. Seagate was supposed to be on its way to becoming irrelevant. And then AI data centers changed everything. Because when you're talking about the sheer volume of data needed to train and run large language models, petabytes, exabytes of cold storage, HDDs are actually the most cost-effective solution by a significant margin. Solid state is great for performance-critical applications, but for mass archival storage, Seagate is having a full renaissance. The stock has had an impressive run over the past year. So where's the insider activity? Multiple executives, including the CEO, have been selling into this rally. Disclosed sales totaling tens of millions of dollars over the past 6 months. Pre-scheduled plans, yes, but the timing and volume is notable. Now here's the fair pushback. If AI data centers are the catalyst and demand for mass storage is only going to grow, why are insiders reducing exposure now? Here's the nuance. Seagate has had an extraordinary run. The stock has repriced significantly in anticipation of demand that is real. But the question is whether the current valuation already prices in 3 to 4 years of growth. The insider selling isn't saying the AI storage thesis is broken. It's probably not. But at these prices, the risk reward for the next 12 months is less favorable than when the stock was much cheaper. For a long-term holder, hold and be patient. For someone thinking about entering today, the insiders are handing you a yellow flag, not a red one. Texas Instruments. This one surprised me when I first dug into it, because Texas Instruments is not a name most people are associating with the AI wave. And yet here we are. Most people know TI from the graphing calculators they used in high school. And yes, TI makes those. But that is a tiny slice of what this company actually does. Texas Instruments is one of the world's largest manufacturers of analog semiconductors. Chips that manage power, convert signals, control sensors. They're in your car, your industrial equipment, your home appliances. And increasingly, they are foundational infrastructure for AI-adjacent hardware. It's not a flashy AI play. It's a classic picks and shovels story. The AI build-out requires an enormous amount of analog semiconductor content that nobody talks about because it's not the GPU grabbing headlines. And TI's competitive position in analog is incredibly strong. Manufacturing advantages built over decades that are genuinely hard to replicate. Now here's where it gets interesting. TI has had a complicated last couple of years. The stock has lagged peers because the company has been investing heavily in new fab capacity, which compresses near-term margins. But the insider activity at TI paints a more optimistic picture than the market has been pricing in, because it's not just selling. There are notable open market purchases from board members in the last quarter. Open market buys are the most bullish insider signal there is. Nobody is required to buy their own company's stock. When a director writes a personal check at market price, that is a conviction bet. And we've seen that at TI in a way worth taking seriously. The bull case. You're buying a world-class analog semiconductor franchise at a moment when the near-term headwinds are already well understood and arguably over-discounted by the market. When TI's capacity investments start generating revenue and AI-driven demand for analog content accelerates, you have the setup for a significant re-rating. For a patient investor with a 3 to 5 year horizon, this is one of the more compelling setups in semiconductors right now. Stuck 3. Okay, this is the most complicated conversation of the three, and I want to be careful about how I frame it, because unlike Seagate and TI, this is a stock where the bear case deserves a genuine hearing. Cloudflare operates one of the world's largest global networks. They sit between the internet and pretty much everything you do on it, handling security, performance, traffic routing. If you've ever seen a Cloudflare screen while a website was loading, that's them. But increasingly, Cloudflare has been building a significant edge computing and AI inference business. As AI applications proliferate, a lot of inference, the actual running of AI models, needs to happen closer to the user rather than in a centralized data center. Cloudflare's network, present in over 300 cities globally, is positioned to be that infrastructure. The stock has been volcanic, swings of 30–40% in both directions over the past 2 years, high conviction, high volatility, and insiders. Multiple executives, including the CEO, have been selling fairly consistently through these swings. Here's the legitimate bear case. Cloudflare is not cheap on any traditional valuation metric. The AI infrastructure build-out is real, but whether Cloudflare captures enough of that market to justify its current multiple is genuinely open. They face competition from AWS, Google, Microsoft, hyperscalers with distribution advantages Cloudflare cannot easily replicate, and the consistent pace of insider selling, even through down periods in the stock, is something you can't entirely explain away. But the counter-argument is also compelling. The CEO's sales are almost entirely through a pre-scheduled plan running since the IPO. This is not new behavior, and it hasn't predicted underperformance historically. More importantly, the product velocity at Cloudflare has been remarkable. They've shipped more AI-adjacent products in the last 18 months than most enterprise software companies ship in 5 years. Developer ecosystem is growing, net revenue retention remains strong, and their edge inference platform, Workers AI, is gaining real traction in ways the market hasn't fully priced yet. Bear case is logical. Bull case is also logical. This is a stock where insider selling is maybe the least informative signal. What matters is whether you believe in the AI at the edge thesis long term. My read. Cloudflare is a genuine long-term compounder if that thesis plays out, but size your position accordingly. This is not a bet the farm name, it's a have a position name. So that's the full picture on all three. And here's what I want you to take away from today. Insider selling is not a 5-alarm fire. In a market where AI has driven valuations to levels that would have looked insane 3 years ago, the data without context is just noise. Seagate. Yellow flag, not red. Texas Instruments. Insider buying mixed in, genuinely interesting setup. Cloudflare. Complicated, size accordingly. One more thing, if the hyperscalers. Your Amazons, Microsofts, Googles. If their AI capex starts showing cracks, stocks like these are going to feel it. I covered exactly that scenario in last week's video, and it connects directly to everything we just talked about today. Link is right here. Watch that next, because the two together give you a much more complete picture of where this AI infrastructure trade actually goes from here. If this was useful, drop a like, and I'll see you in the next